Hi everyone, I'm Emily. Today we're not talking about tech or AI, but about a company that's transforming global healthcare, Eli Lilly, ticker symbol LLY. This stock has been one of the biggest winners of the past few years, soaring more than 90% over the last 12 months and briefly crossing a market cap of $850 billion. Some analysts now believe Eli Lilly could become the first trillion-dollar pharmaceutical company. But what's really driving this incredible growth? And can it continue? Let's find out. And Eli Lilly is a global pharmaceutical giant headquartered in Indianapolis. The company has been around for nearly 150 years, but what's impressive is how it keeps reinventing itself. Its most famous products today include Mounjaro and Zepbound, two breakthrough drugs targeting type 2 diabetes and obesity. It also produces cancer treatments like Verzenio and is making progress in Alzheimer's research with its drug donanemab. In short, Eli Lilly is no longer just a traditional pharma company. It's at the intersection of metabolism, neuroscience, and biotechnology innovation. In 2024, Eli Lilly reported revenue of $34.1 billion, up 28% year over year. Net income surged to about $6.7 billion, and earnings per share came in at $7.19, up roughly 44% from 2023. The company's gross margin remains strong at around 78%, and its operating margin expanded thanks to massive sales of Mounjaro and Zepbound. In the first half of 2025, revenue growth accelerated even further, up more than 36% year over year, driven by the weight loss segment. The real growth story behind Eli Lilly is the global obesity drug revolution. Its drug Zepbound, launched in late 2023, quickly became a blockbuster. Demand was so high that the company struggled to keep up with supply. Combined sales of Mounjaro and Zepbound are now expected to exceed $20 billion annually within the next 2 years, a scale comparable to the revenues of Pfizer at its COVID vaccine peak. What's driving this boom is not just medical need, but a massive shift in social attitudes toward obesity treatment. People no longer see these drugs as luxuries, they're lifestyle transformers. And that makes Eli Lilly one of the most influential healthcare companies in the world right now. Let's talk about valuation. At around $900 billion in market cap, Eli Lilly is now worth more than Tesla and Meta. Its price-to-earnings ratio sits around 88, which is very high for a pharma company, even higher than most tech stocks. Analysts' average 12-month price target is around $950 to $1,050 per share, with some bullish targets going as high as $200. So, while the growth story is incredible, investors are paying a premium for future expectations. Of course, there are risks. The biggest one is supply constraint. Even today, Eli Lilly can't produce Mounjaro and Zepbound fast enough to meet global demand. Another risk is competition. Novo Nordisk, with its drug Ozempic, is fighting for market share and also expanding into oral treatments. And finally, there's regulatory risk. As governments around the world scrutinize drug pricing, profit margins could face pressure. Still, these challenges are normal for a company that's growing this fast, and so far, Eli Lilly has managed them well. Looking ahead, the future looks bright for Eli Lilly. The company is expanding its manufacturing capacity worldwide, especially in the United States and Germany. Its pipeline includes not only next-generation weight management drugs, but also treatments for Alzheimer's, autoimmune diseases, and cancer. If even half of those pipeline projects succeed, Eli Lilly could easily surpass the $1 trillion market cap mark within the next 2 years. My take? Eli Lilly is a rare mix of stability and growth. It's a defensive stock that's behaving like a tech rocket, and that's why investors love it. But remember, At these valuation levels, there will be pullbacks. For long-term investors, it's a story worth holding through the volatility. So, what do you think? Is Eli Lilly the apple of pharma, or are we in the middle of another overhyped moment? Let me know your thoughts in the comments. If you enjoyed this analysis, don't forget to like the video, subscribe to the channel, and turn on notifications so you never miss my next deep dive. Thanks for watching, and I'll see you in the next video.